the uses of insurance, the importance of insurance in the supply chain, the third-party business services, risk auditing service, and risk management, and explain disaster recovery services to restore the supply chain. Now, first of all, we are going to look at insurance and the type of insurance. So, as said earlier, insurance is a product or service which provides protection against the potential risks and it involves two parties, which are the insurer and the insured. The insurer is the company that is rendering the service, and the insured is the company which receives the service. And insurance companies work by receiving a premium payment from the insured, and then in turn, when there is a potential, when there is a risk, the insured takes claims for payment, and then they transfer the risk to the insurer. Now let's look at some of the types of insurance we have. The first of it all, we have liability insurance. This liability insurance is bodily damage or from the insured operation. So in this case, for this insurance, the insurer pays for the liability that happens at the insured place, such as bodily injuries and activities that happens as a case of operation. Then we have product coverage liability, which is from the manufacturer's company, and this is to cover defects in the production of a product. And then we have casualty insurance. This insurance is covered against a person suffering from damage or who is injured. Then we have crime insurance. This insurance covers operations of the organization of the third party, which is arises as a result of staff mishandling, robbery, or theft. Then we have political risk coverage. It insures the organization for losses arising from political instability. Then we also have credit insurance. It is a type of insurance purchased by a borrower, which pays an insurance after death or in event of death. So these are some of the type of insurance that we covered. Then we also have professional insurance. This insurance covers a professional who is damaged due to omission or a defect in carrying out his operations in the business or the workplace. These, my colleagues will continue with the importance of insurance.
My name is Anandongo once again. Okay, so I would like to talk about some importance of insurance. As we all know, insurance must have some importance to us. If not, we will not go for it. So I would like to talk about some few points on the importance. So first of all, we say that insurance keeps commerce moving. That's insurance company. This is where the insurance company gives support to the insurer when maybe the owner, or maybe when the company's owner is no more. This is where the insurance company give the company support. The next point is the insurance grants peace of mind. So as we all know, when you go for an insurance, it will give you peace of mind because you see, for instance, maybe when I have I own a motorbike and I've insured it. Why did I insure it? Because when maybe I'm afraid that when something happens, at that moment I might not have enough funds on me. So this is the case that because I've insured the motor, the insurance company will come and do what? Support me. Whether maybe hitting someone or maybe when the bike is faulty or had an accident. My dear, I hope I'm right. Am I right? The third point I'll talk about it is the insurance. Insurance provides safety and security. Okay, so here, insurance provides financial support and reduce uncertainties in business and human life. So here I would say that it provides safety and security against life. Let's say when you go for an insurance, maybe when you insure yourself and something happens to you, definitely the insurance company will do what? Will save you. Maybe when you go to the hospital, they will, try to pay some of your bills for you. Even some of them, unless they pay all, and some of them they pay some percentage. Sorry. So the next point is spreading of risks. That's insurance facilities spread risks from the insured to the insurer. The basic principle of insurance is to spread risks among a large number of people. A large number of persons get insurance policies and pay premium to insurer. However, a loss is incurred. It is compensated out of the insurer. Sorry. So I think this is self-explained. Sorry. This is self-explanatory. So I would like to add one point. Okay, so here I say that insurance provides financial protection. So as I said earlier on, and when something happens to you, and maybe you don't have enough funds, so you definitely the insurance will save you from maybe using much of your pocket money. So I will end here for my colleagues to come and continue. Thank you so much.
Uses of insurance. So the main purpose of insurance is to minimize your exposure to risk. So when there's a risk, insurance ensures that your impact is minimized. So some uses of insurance include damage to or the loss of physical assets such as your premises or your property. So in case there's fire outbreak in your premises or there's any loss of physical assets in your company or workplace, the insurance that you undertake will ensure that all those physical properties or the loss of your premises or anything is being covered for. And also you can insure your members or staff in case there's illness or death of a professional in the company. Insurance will help you recover. And then compensation claims against the business or its directors by employees or customers. So this is a legal action that is taken by employees or customers to ensure that any harm that is caused in the workplace or in the consumption of any products by any product or service by the company will be catered for. And then business interruptions caused by external events such as terrorism. Terrorism is simply the use of coercion and stress to acquire social or political power. So in case there's any of such external events that affects your company, insurance will take care of it. And then we have mortality and cash pressures following an incident. So if there's any incidents that affect the cash flow of your company, insurance will make sure that you are not fully impacted with the
the use of third party credit rating. The third party is a solution of a borrower, credit borrowers, and also conducts an independent entity. It's a typical credit rating agency, and these agencies assess the borrower's ability to meet their financial obligations, such as repaying loans, bonds, and assigning rating based on their analysis. Some key points are independent assistance. The rating is provided by the external agency that is not directly involved in the loan or financial transaction, ensuring an on-basis evaluation. Second is the credit withdrawals. The rating reflects in the borrower's ability to repay debt obligations, considering the factors like financial health and performance to make the market condition safe. Also, the use by the investor and the lender. The third party credit rating helps the investor or lender to make information decision about the lending money or investing in bond and other debt instruments. So in summary, this agency plays critical roles in financial markets by providing transparency and reducing information between the borrower, lender, and investor.
So the next thing we'd like to talk about is risk auditing. Risk auditing is the systematic evaluation and examination of risk management. The risk auditing is basically talking about a firm bringing in a third party to come and evaluate and examine the organization's risk management processes, procedures, and then their internal control systems. So we can conduct risk management, or there are three forms of risk management. The first one is the external auditing, research companies, and then mystery shoppers. So I'd like to tackle this one after the other. So the external auditors are individuals or firms that are contracted to come and conduct an auditing services of a firm's risk management controls and procedures. So this purpose is to identify potential risks, ascertain its impact, and then give recommendations on how to mitigate such risks. The research company is an entity or organization which gather information and analyze data on basic topics. So they gather information and analyze data on research topics such as consumer behaviors, marketing trend, and then all those forms. So they are an institution who deal with research. So a firm can engage them to conduct research on them, on the market or potential product they want to provide, and then they get information about the risks involved in that particular market they want to engage themselves in. And then the next thing I'll talk about is the mystery shoppers. These are individuals that are employed. So they are engaged by a firm to come and audit their customer services or a particular portion of their department. So they hire people to come and then disguise themselves as consumers. So they come to buy from the firm. So they help them ascertain whether their customer services are on point or there is quality problem with their product or all those things. So this is where I'd like to end my presentation and then call on my colleague to carry on.
We are moving on to the disaster recovery services. First of all, what is disaster recovery services? Disaster recovery services are simply the backup plan for an organization in terms of disruption or in terms of a natural disaster or human-induced event. Human-induced events such as terrorist attack, natural disasters such as flood, tsunamis, earthquakes. So we are saying that disaster recovery services are organization that provides a backup plan for an organization in terms maybe the organization fails to perform, or in terms maybe there's a disruption. We are moving on to the third party services, at which who provide disaster recovery services, and you have commercial services. Commercial services are organization which provides backup data to an organization. For them, you have to pay them and they provide you with our services. Example, the MTN cloud-based service. For them, they store important data for organizations and individuals, and in terms you use that data, you pay them and they provide you with that information. We are moving on to the specialized ICT services. Those are ICT organizations that provide backup to an organization in terms of solely on ICT tools or ICT services. So for them, for example, the FFGs, they use Tally and QuickBooks, and in terms of whether there's a disruption, they call those organizations and support them in case maybe they can't perform, or in case maybe they find a difficulty in it. They are going to the public emergency services. The public emergency services deals with those firefighters, they deals with those police services. For them, when there's a disruption, maybe there's a fire outbreak in an organization, you can't do it alone. You have to call them for them to come and solve it for you. So these are that. And we are moving on to the why we outsource some of these services. Why we outsource some of the disaster recovery services. First of all, we outsource it because of cost savings. Employing specialists who can undertake these disaster recovery services can be costly. So sometimes when you do your cost benefit analysis, outsourcing it will be the best option for you to undertake. And also, we outsource it because managers or the CEOs can be traumatized. For example, you have a business and it has collapsed, or there's a problem over there. At that point in time, you have a mental, for example, disorder. So at that point in time, that boss or that manager cannot undertake its core activities. So for that one, they outsource it to a third party in order to undertake these services, in order to keep the organization running smoothly and effectively. And also, we do this because of recovery experiences. Most of the organizations don't have the experience to tackle these disaster recovery services. So outsourcing it to a third party is very important and is very key to the organization. That is why they do that. And also, they provide support to the organization, support to employees. When there's a fire outbreak or flood in an organization, or when there's a network failure or server, the third parties provide employees with the needed information for them to work smoothly. It brings about efficiency and it connects the employees and organizations together. So at this point, we'd like to conclude our presentation. Thank you.
Thank you for the presentation. Now, question time.
When we were presenting, you said
Not to go with the entire.
but I'm thinking for what you said. I heard you saying a disaster recovery service is a backup plan for an organization. So then what is a contingency planning?
Contingency planning normally deals with you reducing, they are the plans you set down for reducing the risk to an organization. In case maybe, for example, you have stocks and demand fluctuates. So at that point in time, you put a contingency plan. In terms maybe you are out of stock, you go to the contingency plan and sell it to customers.
When you are using the contingency, I don't understand.
Yeah?
I said, what is a contingency plan? Because
Plan
you said,
It's a plan B. Like contingency plan are the plans that they are the backup plan that you set down in order to reduce an unforeseen circumstances or to mitigate it.
so are you saying that backup, this one, contingency plans and disaster recovery service are all backup plans?
They are not all backup plans, but they are a branch of contingency planning.
So disaster recovery service is a branch of contingency planning.
From my understanding, I think contingency plan is
done by the organization itself. So it's a plan B for the organization. But then disaster recovery services is to another organization to come in when there's a disaster or natural.
So the disaster recovery service only comes in when an organization is in a disaster situation, just to help them recover back to their original state.
Yes.
Any other? Blade. Any other question? Ask question. So I heard risk exposure. And I think we treated this the first week, right? So then please, what is risk exposure?
Being exposed to
so the first week that we met, I took you through the technologies of risk management. I hope you remember, where I was able to clearly explain what risk exposure is from vulnerability. I hope you remember. So then, what is risk exposure? Convince me.
It is the potential risk that is exposed to an organization is exposed to.
potential loss that an organization experiences.
Can we change the expose?
Can we change the expose?
It's being faced with.
The experience, who the experience?
So there is that an organization is prone to or is exposed to.
It's exposed to or prone to. Then what is risk vulnerability?
Risk vulnerability is the likelihood of a risk event occurring.
Then what is risk?
It's an unforeseen event that causes loss to an organization or an individual.
So now you see why I spent 2 hours to take you through just the technologies and you've forgotten. Yes, any other question? Please ask questions.
I have a question. When representing, speak about mystery shoppers.
Okay, so like I said earlier, there are individuals or third parties that are employed. So they come to the organization, they are employed by the organization. Let's say a retailer who employs such mystery shoppers who come and buy from its own firm. But it's done to audit its services. So they use such means to identify whether there are challenges with their customer service, there are challenges with their quality of the product they produce, or the internal form. They want to know whether they are meeting the standard they set by itself. So the mystery shoppers are just basically individuals that come anonymously to buy. They disguise themselves as customers and they come to buy for you to get information.
A follow-up question. So if a mystery shopper is supposed to identify the quality of the goods for the customer service, identify the goods, why will a mystery shopper, how will the person identify the quality of the
By you buy the goods or you procure the services that you are offering. So
when the product comes out, go through the standardization authority.
yes, some mistakes do happen. Human beings are likely. Recently, there was a video circulating, Coke or something. There was ants in it, so it happens. Yeah, sealed Coke bottle, there was ants in it, so it happens. So that's why they buy, so that they also get to audit. It's just a form of making sure that whatever standard you set in the organization is being adhered to.
So the standard. Let's go to Lee. What they tell you? Benchmark or what? When a company set standard of which they are not supposed to produce below that standard, what they tell you? to the entire class. Yes. Any benchmark. That was when we did the calculation. It's known as the sigma level.
So this is sigma level.
Sigma level.
Sigma level.
So let me ask the last question, since you don't want to ask questions. Carry, any question? So now I feel like that some of you don't want to ask questions. So for the subsequent, the link, if you ask a question, you get +1. If you don't ask, you get 0. That will encourage you to ask questions.
There's no like that.
Okay, so please come. The next book, book 4.